When discussing the concept of infinite banking, people often ask the question, how is this better or different than my qualified plan in my retirement account, Shawn? Well, do you guys want the short answer or the long answer? You want the long answer. So, while whole life insurance, as used in the infinite banking concept, is fundamentally different from qualified plans and retirement accounts, one of the key differences is that it's not an investment. So that means there's no inherent risk. Now, while most people are extremely familiar with traditional retirement planning through their employer or government sanctioned programs, maybe they're not that familiar, they just take part in them. Infinite banking operates outside of these systems, offering a few things that once you live with, believe me, you can't live without. I'm talking about unmatched flexibility, liquidity, and freedom from restrictions. So today, we're going to explore the key differences as to why myself and many others, I'm not doing this alone, believe whole life insurance is the ideal asset for building your warehouse of wealth while giving you back control of creating your legacy. My name is Shawn King, Infinite Banking Specialist, and today I'm going to break it all down for you guys. So let's start with why people ask this question. They want to know, Shawn, how is this better or different than what I'm already doing? So first, let's break down a few things. When discussing savings and retirement, most people are familiar with what they've been educated about, right? You only know what you've been taught. They're already, most people are already participating in traditional retirement plans like 401ks, IRAs, 403bs, the normal ones. And because the brain automatically wants to draw similarities between something so it can understand it better, they assume that infinite banking must work the same way. But another point I want to make is an obvious one, and you'll most likely know this to be true for yourself, but most people have been influenced by HR departments, the media, and financial traditions that emphasize market-based accounts. Now, unfortunately, most people that talk about that stuff don't talk about this stuff. And the third point that I want to make is a very important one when it comes to what we're teaching here. Most people don't fully understand the distinction between banking, aka financing your life, and investing, aka a speculation of returns. The last point I want to make about this specific topic is rarely, if ever, has someone actually been educated on the value of cash value life insurance, because so little is spent on purchasing life insurance relative to the other big time financial strategies. I think this lack of familiarity creates a lot of confusion around the topic. The good news is, though, guys, infinite banking doesn't compete with traditional retirement plans. It operates in a completely different space, so there's no need to even compare the two. The second thing I want to touch on is, before I jump into why properly structured whole life insurance is the ideal asset, I want to educate you guys for a moment on the differences between qualified and non-qualified plans. I'm sure a lot of you already know this information, but hang in there with me. So first, let's start with qualified plans. Now, multiple plans are going to fall into this grouping, like your 401k, your 403b, IRAs, 457 plans, 529 accounts. These are government created plans that are also governed by the IRS rules. Don't like that. Now, I'm not here to completely bag on these options because I know oftentimes this is all that people even know about. So this style of plan offers tax advantages like tax deferred growth or tax-free withdrawals if you're dealing with a Roth IRA account. But before you get too excited, oh yay, tax-free, they do come with significant restrictions. Number one, contribution limits. You can only contribute up to a certain amount each year. So what do I do with the rest of my money? Number two, income qualifications. Some plans are only available if your income falls within specific parameters. Basically, if you make too much, you could take a hike. Number 3 is age restrictions. Withdrawals before 59 and a half often result in penalties. But y'all knew that, right? Number 4 is withdrawal requirements. This is not something they talk about often or really even educate people that much on at all. But at a certain age, I believe it's 72, might be 73 now, required minimum distributions or RMDs force you to withdraw cash and pay taxes on the money that you're pulling out. Don't worry, they'll keep doing that until you die because the government wants their cut. Number 5, and last up on the docket for qualified plans, is market dependency. I'm not gonna lie, I've spoken to people who knew so little about their 401k that they didn't even know that their money was being put into the market. So, just to be clear, these accounts are typically tied to speculative investments in the stock market, meaning your success or complete downfall depends on market performance. Now, let's transition over to non-qualified dollars. You see, non-qualified dollars are simply dollars that exist outside the IRS tax system. Yay! Love that. They've already been taxed as income, so you're good to go on that, and you're free to use them as you please. Sounds pretty nice, right? Whole life insurance is a non-qualified asset. It isn't created by or dependent on the government, and I'm sure very few of you know this, but it actually predates the US tax code by nearly a century. That's a long time. Life insurance dates back to the near 1700s, while the IRS was created just a few years ago back in 1913. So, because life insurance exists outside the IRS system, it avoids many of the restrictions tied to qualified plans. No contribution limits, no income qualifications, no penalties for accessing your cash value at any age, no RMDs, no government oversight of how or when you decide to use your money. Now, I don't know about you guys, but that sounds like some pretty good benefits to me. So, let's move on to number 3. Let's discuss some of the key problems with market-based qualified plans. Personally, you guys, I don't like anything that is going to limit my financial flexibility and control that I have over my money, which is why I don't participate in any sort of qualified plan. I'm not going to say that you can't or shouldn't. I'm just saying I don't. I want to take a quick second though and talk about speculation and risk. Let's be honest, guys. No one knows what the market is going to do. It's all speculative. There is no guarantee of returns. You're literally betting on market performance, which is uncertain to say the least. Another big one that they want you to look at is historic averages. Advisors often tout historical averages, knowing damn well past performance is no way a guarantee for future performance. And then to cap it all off, our good buddy, sequence of returns risk. Go ahead. I dare you to even think about taking your money out when the market's down. Unfortunately, when it comes to the market and accessing your cash, timing is literally everything, especially in your retirement years. Everything is based on speculation, and a few wrong moves could essentially end up dismantling your long-term plans. In contrast, infinite banking utilizing whole life insurance eliminates speculation. Your cash value, this stuff right here, grows with guarantees, not guesses. I don't know about you guys, but I'm not interested in locking up my money in a place that's hard to access. And I damn sure don't want to give up control of my good dollars now for weaker dollars later. If you don't know what I mean, then it's probably time that you look a little bit more into inflation. But I'll give you an example. Could you buy more things for a $20 bill 20 years ago or today? Easy answer, right? What about 20 years from now? More or less for that same $20. So why are we locking up our money in these qualified plans, allowing other people to make money with our money, while we make no guarantees that our money will actually make us money? And even if it does make us money, we can't touch that money without paying money and extra money until the future when those same dollars are weaker. You gotta be shitting me. How did they convince people that this was a good idea? Whole life insurance, on the other hand, offers immediate liquidity through cash value loans. Your money is accessible when you need it, not when the government says that you can have it. Because luckily for you, the government has no say in your private contract. It's your policy. You own it. Oh, and don't forget, with whole life insurance, your withdrawals via loans are tax-free. Your cash value continues to grow, uninterrupted by market conditions or any other outside factors. I know, that's crazy, right? So, just to give you guys a quick recap, we believe whole life insurance is the ideal asset because it offers benefits that qualified plans and market-based accounts simply cannot match. I'll list a few of them off for you guys, just so you can kind of have a refresher, something to leave with. Number one, guaranteed growth, meaning that your cash value grows every year, no matter what happens in the stock market or anywhere else. Number two, protection of your capital. Your money that you put in is safe, it's secure, and it's compounding uninterrupted for life, even when you use it. Number three is liquidity. Access to your cash value at any time for any reason without penalties, restrictions, or stupid questions like, what do you want your money for? It's my money and I need it now. Sorry. Number four is tax advantages. Cash value grows tax deferred and loans against it are tax free. Number five, a real big one, legacy benefits. The death benefit guarantees a financial legacy for your family, helping you potentially set up generations to come. I don't know about you guys, but that's a huge benefit for me. Number six is privacy. Your policy and cash value are private. There's no government reporting required whatsoever. Unlike qualified plans, whole life insurance doesn't make you choose between saving and spending. You can store your money in your policy, let it grow, and still use it to go pay off debts, fund investments, or make major purchases. I could give you a bunch of examples of stuff I've done with mine. Some would say, you could have your cake and eat it too. But on a more serious note, you guys, infinite banking isn't about replacing traditional retirement plans. It's about thinking differently about how you manage your money. While I guess the idea of a qualified plan is to help you save for retirement, even though it's investing, not saving. Infinite banking is about how you finance your life. It's a system for warehousing your wealth, creating cash flow, and keeping control of your hard-earned money. Instead of being narrow-minded and comparing market returns, consider this, you guys. Where's your money safe? Where is it growing with guarantees? Where is it liquid and accessible when you need it most? Whole life insurance checks all the boxes, making it an invaluable tool in your journey towards financial freedom. To wrap this all up, my final thoughts on qualified plans versus infinite banking. Qualified plans and retirement accounts are designed for specific purposes, but they come with significant restrictions and risks. Whole life insurance, as used in the infinite banking concept, offers unmatched flexibility, guarantees, and control. It's not about better or worse, it's about understanding the differences between banking and investing and choosing the system that you believe best works for you. Infinite banking allows you to use whole life insurance as the ideal asset, a tool for literally building wealth, creating cash flow, and financing your life while maintaining complete control over your system. With that being said, folks, if you're watching this and you're not yet participating in the practice of becoming your own banker, but you were like, wow, that's pretty interesting, I definitely want to learn more, head down to the description of this video and click the link. That'll take you over to our website where you can check out our full save and spend overview, which honestly, guys, will be extremely helpful. After that, go ahead and book yourself a free cash consultation with myself and my team, and we'll sit down, we'll answer all of your questions, and we'll discuss exactly what your goals are and how infinite banking can be the foundation to building your legacy. Please don't forget to like this video, subscribe for more financial insight, and check out some of our other super helpful videos on the channel. As always, you guys, the information is free, but the knowledge is priceless. I'm Shawn King, and I'll catch you on the next video. Peace.